Hey traders, welcome to Charts and the tiniest cup of coffee. It's practically a shot glass that you will ever see me drink from. Welcome to Charts and Coffee, everybody. Oh, but it's still tasty. All right, good to see everybody. Hope everyone had a wonderful weekend. Hope everyone got a chance to join me for our Sunday show. How many of you have been able to join me for the Sunday shows we've been doing? I do not have theme music for the Sunday show. I don't. And so we've been covering the weekly notes and kind of getting the week started. I know. Where's the real Raghee? What's with this tiny little cup of coffee? I know. Usually this thing's as big as my head, right? Don't worry. I have not been abducted by aliens. I've been up since 3:40. So massive quantities of coffee have already been consumed. I am properly though caffeinated, so we're good. We can indeed caffeinate and dominate together. As always, gang, great to see everybody. I do want to take a quick pit stop here at the economic calendar. We have FOMC chuckleheads galore this week. We have FOMC meeting minutes. Non-farm payroll have absolutely kind of cleared the way for definitely at least a higher expectation for the May 4. Take a look here. It was May 4 half point hike. Take a look, 73.3%. Now, of course, we have a lot of data points, a lot of hot zones between now and that May 4, meeting. However, right now it looks like it's very much on track for, clearly at least a quarter point, maybe that half point hike. So that is where we're at with the rates. And I will say this is something that I put in the notes yesterday. You know what? Let me let's see. Do I have the notes here? Yeah, let me at least show you what I'm talking about. So let's see if I can't. There we go. So my whole thing, for those of you that know, is I look at the index sector stock. We look at the tide, and we start with the biggest tide first, which is going to be the indices. Gosh, in some ways, we even look at, I guess you can in some ways say, an even bigger tide when it comes to currencies, the largest markets in the galaxy. And so we're looking at the influence that one has upon the other as we move from a larger market to a smaller market, to a smaller market, to a smaller market, until finally we end up with stocks. I can say that with the exception of a handful of sectors, most of which we're in at the moment because they're trending, and that's what we do. We prioritize those trends. Right now, there is almost no use for sort of this sector by sector breakdown of, well, here's what XLK is doing, here's what XLC is doing, here's what XLY, XLI. That's usually where I start. That's my process. But right now I won't really do that because it really doesn't matter right now when so many of these sectors are in chop, and it makes so much more sense to dive in even deeper to the to what the narrative is around the individual stocks, right? What's the narrative around the individual stocks? So the best clarity, when I say best, it is always going to be a trend, up or down, up preferably, down after that. It's going to be a trend. And then once we've exhausted uptrends, we look for downtrends. Once we've exhausted downtrends, we look for well-organized chop. And so if you're following that process, gang, there's no lack of trades to take. In fact, one of the things that's really the biggest impediment for trades for me is my book is too full, right? I'm pushing the upper end of deploying capital to the point where if for whatever reason we were to see some sort of drama befall the market, I'm near that risk of ruin in terms of how much of my capital I can allocate based on the risk per trade. So, this is where if you're struggling to put that watch list together, try that process I just mentioned, and it should give you all a lot of clarity, right? Hopefully that's going to put you on a good track. All right. So as always, this show is about your questions, and I'm trying to move my screen around in such a way where we don't have the questions overlay the charts. I know a lot of you say, Rock, I want to be able to see the chart. So I'm going to do my best to move that around. I think that looks pretty darn good, if I don't say so myself. And I just did. All right. Good morning, Harley. I like the new intro screen. Oh, cool. Building a strong trading foundation. Oh, I love it, Harley. What a great way to kick off Monday morning. I was just posting on my Instagram feed this morning, which I don't get on social media enough, but every now and then it just entertains me a bit. Let's see, continue as Raghee Horner. So, which would be good. That is me. Although there's probably a half a dozen Raghee Horners on Insta, which is just really, all right. So here we go. I posted our show, when we have, and I said, I get to the studio, sit with my hair and makeup team and lighting staff, wardrobe assistant. We get the teleprompter. Of course, I'm being completely silly, So anyway, I do love doing the show. I absolutely do. And I appreciate everyone being here. Now, I love the questions. All right, let's get to it. Hey there, David. XLC, SBUX, and CLOU, are they still at play, or are there better corners of the market to look at this week? So, David, XLC, no. I got stopped out of XLC once we hit the paper cuts. We took a small loss. That was, XLC and CLOU were actually, I believe, our only two losses for March. So and not that I'm seeking to go 100% win rate, because that's actually not good either. But we were almost going at 100% until those two losses at the end of the month. But that's okay. We took our two paper cuts and moved on. Starbucks, we are still in. Now, Starbucks got very close to that paper cut, but it did not exceed it. And so we're still in Starbucks, and we're going to see finally, a gap close. We're going to close the gap to March 2.8, and we're seeing some great follow through on this trade. Now, I know you know this, and I'm going to mention this for maybe some newcomers. Gang, when we get into a trade, it doesn't mean that at that point forward, it's just going to work. Trades do not just work or not work immediately, right? I know all the books make it sound as if you get in right, it just starts working. And if you get in wrong, you just know right away. As if it just isn't always that clear, especially if you are not a momentum trader, which I am not. Not that there's anything wrong with that, but I'm not a momentum trader. And so when you're playing exhaustion, there is going to be a period of time where the markets just sort of settle down around a zone that we believe would be the exhaustion area. And then we wait for, once things have settled down, imagine going forward and throwing your car into a reverse, right? If you're going forward, what do you have to do first? Let off the gas, hit the brakes, and stop, unless you want to destroy your transmission, right? Once you stop, then you can change directions. In a lot of ways, markets are the same thing. We cannot throw our cars from drive into reverse. It just doesn't work that way. Maybe once it'll work that way, then it's not going to work again. But the markets have to decelerate, stop. Once they've stopped, at that point we can see, any kind of change in direction. And so Starbucks was in that mode where we're decelerating, finally hit the brakes, and then we can see now we're going to see a wonderful gap open in the favor of those puts that we've had. And I know it's been trying, but it's so important, gang, to use the paper cut calculation that I share with you all in the Sector Secrets Mastery, and then the specifics about the timing, where I say, hey, at a certain time of day, I do not want you to pull the trade, because oftentimes it's going to be a rope-a-dope. And so that's pretty much where we are at Starbucks. Out of XLC at a loss, out of CLOU as a loss. It happens. And then Starbucks should be a nice winner for us this morning. All right. Thanks for the question, David. And by the way, what are we looking at? What are the corners of the market we're looking at this week? Yesterday, right after I sent out the weekly notes, or the report, as I'm calling it, to differentiate it from the notes that we do in the mastery. I sent out another workflowy link for you all with the watch list that we're going to be operating from this week. Okay, starting today, I'll probably use it a bit during our bonus session at 2 p.m. So if you haven't joined the mastery yet, you still have time. We're going into only the second of 5 different sessions between now and into May. So if you haven't joined it yet, come take a look at what we're doing. I think you're going to like it a lot. All right. So, hey there, Zion Spear. Great Sunday notes. Thank you very much. What is the EMA value of the different propulsion dots I am using? So the yellow is 13. The green is 21. The maroonish, reddish, whatever that is 55, and the white is 200. Now, propulsion, and and actually today's bonus is about the indicators, the why and the how. And the propulsion is actually a combination. And by the way, propulsion's a free tool. If you don't have it, head on over to countdowntrader.com and you can download propulsion. If you're on TradingView like I am right now, go into the indicator section, search simpler, you'll see propulsion. It's absolutely free. And what we're doing when you open up that indicator, you'll see it's the combination of 2 moving average crosses, a shorter moving average crossing a longer moving average. That's part of sort of the calculation that turns the dots on, that lights them up. So we're using a lot of classic aspects of technical analysis, moving average crosses, as well as the moving averages themselves. So I hope that helps. Next up is Anders says, good morning. I remember talking about my risk management methodology. How do I get access to that? Anders, there's 2 videos. One, it's in the Learning Center for the Sector Secrets Mastery. And 2, there's a video that I also send out probably about every 7 days to the members in the mastery. So it's available within that mastery, and it walks through budget, affordability, paper cut, position sizing, placing stop losses, all that good stuff. So I hope that ultimately, whatever risk management strategy that you do choose to deploy, one thing should be really clear. And this is not my idea. This is me. Again, as I like to remind everybody, all of us stand atop the shoulder of giants, whether that be our mentors or books we've read or traders that came before us. I am a big believer in avoiding a 50% risk of ruin. And I'm a big believer in position sizing should be based on risk, right? Not necessarily account size. So I think if you start from that foundation, from that, philosophy, it's going to put you in a really great direction. So I hope that helps, Anders. Next up, Integral. Do I make money typically with day trading or swing trading? Where is the best return on time? ROT, return on time. Integral. See, there's return on equity, right? There's return on time, and I even think there's a return on effort. I think swing trading. So it's really not a matter of which is both. And Integral, it just depends on which I'm willing to put time into. I can do very well as a day trader. Leverage is a beautiful thing when you're trading E-mini index futures contracts, or even with the 0-dated options that I like to focus on Monday, Wednesday, Friday. I could buy a fairly large number of options for a small amount of money. Again, leverage, right? It's really wherever your attention is. So I'm going to answer this a little bit differently. It's what you have time for. So in our mastery, I've noticed just over the years where there's 2 groups of folks who do have the time to be in the room and folks who don't, right? If you don't have time to be in the room, you really don't have time for day trading. And I think most of you know this, right? If you can't be at the helm, right, in front of the keyboard, in front of the mouse, day trading on your cell phone or something like that, you're just going to get really out traded by traders who have, I'm sitting in front of my cockpit, right? I've got 9 monitors, a television, my keyboard, my mouse, everything I need to get, I've got a very fast internet, so know when you're not technologically at an edge. And so If you have time in front of your computer the first 2 hours of the day, 9:30 to 11:30, day trading can be very powerful. However, let's say it's not realistic, then that's where the swing or the daily time frames come in. I like to combine both. We do our best to do that in the mastery, but I like to think about most traders focusing on what they have time to do. And you know what's cool, integral, you might find Monday, Tuesday, you can day trade, but Wednesday, you get some scheduling conflicts. Thursday, you can day trade again, but Friday, you may not. And you can sort of flip the switch as needed. So I can't say that one outdoes the other. I can also mention, well, let me mention one other thing, integral. When in January, I think I've been making this pretty clear and sharing with everybody. The first week of January this year, I got my butt handed to me. We went 0 for 4 or 0 for 5 in a row. Immediately, I stopped because that's what I've got to do. And then we went to a shorter term time frame because the lack of technical trends dovetailing with the macroeconomic trends just made sense, where I was not seeing the follow through that typically worked with my strategies and tools. I said, wait a minute, we got to change something up. Let's not have to worry about what happens tomorrow. Let's just trade for 120 minutes a day. And this way, we're not reliant on the market organizing and sort of continuing on with that organization. And so those are sometimes tactically reasons we would day trade. So I hope that somewhat answers your question. All right, next up, my opinion on when to go long MO. Well, I'm a little biased, TT, because we are already long MO. So when would I go long MO again? So Mo, we scaled out at 52.75. I am looking for T2, where we're going to start looking probably at see these Darvas levels overhead. I might either use that as a second target or an optional target. And then really what I'm looking for are higher highs. MO is part of XLP. XLP are staples. XLP are defensives, and defensives look pretty good right now. But like I said, sector trading, sector analysis is not going to be necessarily as helpful as looking at the sector, finding the outperformers within them. And MO is exactly that. If we can pull back again, you can see where I've got all these orange lines. If we can pull back again, we'll get in it. And what you'll notice with these orange lines on my chart, gang, that's where I've got alerts waiting. When that alert goes off, the way that we do it is there's a specific option and a specific strike. We buy at a specific price. So if we get down there again, back in business. TT, hope that helps. What do I think of PRVB? Hey there, Tyler. Ooh, nice double green uptrend north of the 2. Oh, wow. Okay. So the only issue I have with this stock, Tyler, is the price, right? It's really important to use volume when you are playing a sub 10, sub $20 stock, because I think volume is probably more important than even price when it's this low. Participation is very important, but we're just above the 200 when we saw resistance at the 200 before. We're inside the wave, double green. That area inside the wave looks pretty darn good for a pullback buy. I think that would work. All right, so next up is, so lots of folks are here for the Sunday. Awesome. And then the replay is available right there over at the Simpler Trading YouTube channel. So I hope that is something that, and by the way, when you catch either this show, Charts and Coffee, or the Sunday show, and if you have questions and you're catching it on replay, leave the questions in the comments. I'm checking those. Trish is checking those. And I do try to circle back and answer those questions. All right. Okay. So next question. Pfizer long call after earnings. Well, I wouldn't say I love the call now. Long call after earnings, that's still a good ways off. So I'm not sure, Coop. I'm not sure yet. What I would say is within the XLV, I like Bristol Myers Squibb better, but it's nowhere near pulling back. And I like XLV generally better as well. So I like where you're looking. I don't know where we're going to be after earnings, but I do like the possibility for XLV pullbacks as we're getting earnings, getting long in the double green or BMY. All right. So I hope that helps. So how do I come up with the symbols that I share with the folks in the mastery? Sunday homework. I crack open those sectors. I crack open the indices. That is always to scan. Jan, that is always to scan. I don't use a scanner per se. I'm looking chart by chart by chart by chart within that cohesion of the boats and tide mentality. What stocks are trading together and are within this niche or sector or index or some sort of theme where they're likely to move together. Just cracking them open one by one. You know, I've mentioned that a lot of traders want to automate things. I'm a big fan of automating analysis, but when it comes to watch list building, I am ridiculously old school, and I just keep it that way. And then last question, Greg, FXE, how does it look? And my position, I think it's looking pretty darn good this morning. I think we're going to be talking about a target, possibly a second target coming up. So we've stayed long the puts, and I believe we're going to open up around 101.90, I think, this morning. So looking really good. Entry now? Nope, that entry was already built in the wave, and now this is all about getting rewarded for the patience, getting rewarded for sticking with the macroeconomic trend. So thanks for the question, Greg. We're going to wrap it up there. Thanks, as always, for joining us for charts and tiny cups of coffee. I will be back to my normal cup of coffee tomorrow for sure. All right, gang, be good to each other. Same time, same station tomorrow. I'll see you then.